Thursday, May 26, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at a former central banker, Mervyn King. He was governor of the Bank of England from 2003 to 2013. And in a recent interview with Sky News, he said that inflation is in danger of becoming ingrained unless the current central banking model, and he says it's failed, changes. He says we need to change the narrative. He doesn't go on to blame any individuals. He blames the economics profession, but I would say it's a roundabout way of him saying all central bankers are lemmings. They followed this model and now it's failed. He calls it the KingKnut theory of inflation. We're going to come to that in a minute. Before I start, though, I'd like to thank all of you again, all the new viewers and subscribers, all the existing ones. We are growing the community. We are almost at 63,000 subscribers. And even though that's not my objective, the numbers, it is important that we keep growing. My objective really is to try to inform the public about what's going on in the monetary system and the economy, and have, of course, an alternative view of things. And I will try to keep answering as many questions as possible in the comment section. Of course, you can choose to become a patron and join my Patreon account. I will definitely answer all the questions there. And I'd like to thank again all those people using the super thanks function on YouTube. That's very nice of you. And yes, so Mervyn King, he's basically come out and said that the economics profession, really, it's a roundabout way of blaming something else instead of the institution of central banking. He's come out and said that it's failed, the economics profession, and it's not the alternative economics, right? Like I talk about here. I've been warning about this for years, of the current central banking model, or the central banking model period. It was an interesting interview. I'm going to put a link to it below in the description, up in the cards. I was wondering if the reporter who was interviewing him was going to ask at the end, what about why do we need a central bank? You know, why can't we allow the free market to set interest rates? Why can't we not bail out irresponsible bankers every time they get into trouble? Because that's one of the purposes of central banking, as Walter Bagehot said in the 1800s, that it's the lender of last resort. But if we didn't have a central bank, I think bankers would be a lot more responsible. But unfortunately, Sky News is not alternative enough. But what I think is happening here, Mervyn King, he's trying to protect his legacy because he's not that innocent in the scheme of things. And we're going to look at that as well. I have recommended one of his books. He wrote The End of Alchemy, Money, Banking, and the Future of the Global Economy. Mervyn King, he wrote this in 2016. And it's an interesting book. And the most important part for me is on page 261, where he talks about the fact that we could or we should think about going back to 100% reserve banking, so backing all deposits 100%. I mean, I assume he's talking about backing it with government paper. It would be better with gold and silver, of course. And he mentions, of course, people that have actually called for this. So I'll quickly go through here. It says, even though the degree of alchemy of the banking system was much less 50 or more years ago than it is today, it is interesting that many of the most distinguished economists of the first half of the 20th century believed in forcing banks to hold sufficient liquid assets as reserves to back 100% of their deposits. They recommended ending the system of fractional reserve banking, under which banks create deposits to finance risky lending and so have insufficient safe cash reserves to back their deposits. The elimination of fractional reserve banking was a proposal put forward in 1933 as the Chicago Plan. So, and he goes on to say the proponents of the plan included the brilliant American monetary theorist Irving Fisher and a distinguished group of economists at Chicago such as Frank Knight, Henry Simons, and Paul Douglas. So he goes on to talk about how you could divide the banking system, because some people might argue, how will banks lend to businesses? Well, that's why you'd have investment banking on one side where they can lend, the depositors put the money there so that it can be lent to businesses. And then you have a deposit banking, commercial banking, where you're supposed to protect the deposits. So he has tried to warn people about this. Of course, no one's listened to him. We're still in the same old system from 2008 and from the last few decades. And yes, I actually thought his analogy of the KingKnut, trying to stop the tide. He's saying now that central bankers and the economics profession, and I detect the same thing in the markets with investors. They think that if they just say that inflation is going to go down in a year or 2 or 5 years, that it will come down. It's the KingKnut theory of inflation. But I would say that Mervyn King was part of this cabal as well, because if you look at the period when he was governor of the Bank of England from 2003 to 2013, you can see here that CPI in 2008 it went up to 5.2%, and then in 2011 it went up to 5.2%, and despite that, he kept rates near 0 or 0.5%. He never changed the rates. He never raised the rates. And in 2008, he actually cut rates. So he was using this central banking model, this KingKnut theory of inflation. And luckily for him, this measure of prices did go down eventually. So but now he's turned around and he's saying that this theory doesn't work anymore and that it can become ingrained. So let's listen to Mervyn King right now. I've got some important clips of this whole interview. It's not very long, but it's the ones that I think are the most important. He talks about the KingKnut theory. He talks about the fact that they need to do something now, not just talk about it, or else it's going to be even worse next year. If inflation doesn't come down, the crisis will be much worse. And then he, at the end of this clip, he talks about how the fact that he doesn't blame the central bankers. He basically calls them all lemmings. They're just following, the conventional wisdom, as he says. And I think he totally discredits the current central banking model by not being personal. So here we go.
And the argument of central banks essentially is, well, we're saying it will come down to 2%, so everyone will believe us, and so it will come down to 2%. Well, that's a very odd way of thinking about it. I call that the KingKnut theory of inflation. You sit there and you command the forces of the economy to bring inflation down to 2%. Irrespective of whether you're prepared to raise interest rates enough to achieve that. And I think the test will be, once we see towards the end of next year how far inflation has come down, central banks may need to do quite a lot more in order to ensure that inflation comes down from what looks like being double-digit level. It will come down, but will it come all the way down to 2%? And simply asserting that because the inflation target is 2%, then it will come down to 2% is not really enough. And if you think about the risks today, the risks are firmly, I think, on the side of inflation becoming more ingrained into the system, because we keep talking about it, we expect it to happen, and we adjust our wage demands and our price setting decisions accordingly. Well, let me be very clear. I'm criticizing the ideas of the economics profession which have come to influence central banks. It's the ideas that are wrong. And I don't criticize individuals in it, because I think you can't blame them for, going along with what is a conventional wisdom. What we need is a debate about the ideas behind all this. And I think that's what's important. And if we can change that narrative somewhat, I think it will be easier for the bank. Because as I said, if you look ahead, they're not printing money at a rapid rate now.
And now I want to show you what this KingKnut theory looks like. And it looks like the Federal Reserve, they're using it too. And yes, they have raised rates a few times, but as Mervyn King said also in the interview, 1 or 2% is not nearly enough to stop or to bring down inflation. And yesterday we had the May FOMC minutes that came out, and this is what the KingKnut theory looks like in practice. And it says here, this is from Zero Hedge, they had a small article about it. It says, all told, the minutes conclude, and I quote the Fed, total PC price inflation was expected to be 4.3% in 2022. PCE price inflation was then expected to step down to 2.5% in 2023 and to 2.1% in 2024 as supply-demand imbalances in the economy were reduced by slowing aggregate demand and an anticipated easing of supply constraints. So magically, they expect this PCE price inflation to be down to 2.1. And some people are suggesting that the Fed is ready to pivot after the September 2022 meeting. And that might be so. I think one of the Fed governors, Bostich, mentioned something about pausing in September already. So I think the Fed is doing the same thing. And another example of this KingKnut theory of inflation is this silly notion of long-term inflation expectations that the market uses. They look at the 10-year yield and the TIPS yields, and they basically say, well, the market is looking for inflation to be down at 2% next year. So yes, there will be no inflation. And it's a silly notion, because if we go back 5 years, these inflation expectations were around 2 to not more than 3%. And inflation now is over 8%. So it's another example of how the economics profession has infiltrated not only central banking, but the markets and investors. And I think they will be really surprised, because I think inflation is not going to stop. And these people manage trillions of dollars of sometimes your funds through pension funds. Yes, very dangerous. I think a lot of people, unfortunately, are going to lose a lot of the value of their capital, because that's what inflation does. But this individual here, Lisa Abramovich, she's from Bloomberg. You see, they're all Bloomberg, CNBC, the Wall Street banks, the economists. They all look at this. And this is probably one of the reasons why gold and silver haven't gone up that much, because the majority of people don't see, they think that just because they're talking that inflation is going to go down, that it will. And she notes yesterday in this tweet, long-term inflation expectations keep sinking from recent peaks, with the measure of expected inflation over the next 5 to 10 years sinking to the lowest since March. So this is all the KingKnut theory. And I replied to that tweet. I said, this means nothing. How well did inflation expectations 5 years ago predict the 8% plus inflation today? Someone said, this reminds me of the dramatic graph the White House used to show they'd lowered gas by 2 cents. Yeah, and someone also showed this chart here. Economists keep expecting U.S. inflation to subside. So far, it hasn't. So you look at the white line, this is actual inflation, and you look at what their expectations were in 2021, and now they've changed it, and then they changed it in April, then they changed it in July last year, they changed it in October, they've changed it again in January this year, and they're changing it again, and it keeps going higher, right? So this is the KingKnut theory of inflation. And how do I feel about Mervyn King? Well, I think he's trying to save his legacy. He's trying to say, you know, I've warned about this. My conscience is clear. And I think he's worried about ingrained inflation. It could lead to a much bigger crisis, because if they don't do enough now, if the Fed really pivots after September, I bet next year it's going to be even worse. And eventually they're going to have to raise rates a lot more than they probably need to right now. And I think that's what happened in the 70s. They never kept up with inflation enough to stop prices rising. And then at the end, Paul Volcker really had to raise rates to 20%. And actually, Paul Volcker was one of the culprits of what happened in the 70s, because in 1971, he was Undersecretary of the U.S. Treasury for International Monetary Affairs, I think. And he advised that Camp David, on the weekend that Nixon closed the gold window, there were a few things they could have done. They could have raised interest rates to stop the gold flowing out, but they decided to close the gold window and not raise rates. So basically, Paul Volcker was cleaning up the mess that he actually helped create. So unfortunately, I don't think people are going to listen to Mervyn King. They haven't listened to him in terms of the nature of banking, and he wrote this 6 years ago. It was the first time I saw this interview on Sky News. I didn't see many people talking about it, but thank you for the viewer who told me about this interview yesterday. So you see, you do help the channel, and you do help me create content. So with that, let's quickly look at where the markets are this morning. It's almost 8:30 a.m. London time. We've got spot gold at 1847. It's down about $6. Range has been 1856 to 1842. Spot silver is at 2180, down about 18 cents. Range has been 2205 to 2171. The Dow futures up 16. Nasdaq is down 40 points. S&P is down 2 points. FTSE is down 12. Eurostoxx 50 is up 14. To the currencies, sterling is up 0.1%, 125.90. The euro is unchanged, 106.85. The dollar is down 1/3 versus the yen, 126.87. The dollar is down slightly versus the Swiss franc, 96.09. Dollar is up 0.2% versus the yuan at 6.75. Let's look at the Russian ruble. The dollar is up a little bit. We're trading at 60. We had dropped to around 56, 57 the last few days. So the dollar's rallied a little bit against the ruble, is at 60. Aussie dollar is unchanged, 70.88. The dollar is unchanged versus the Canadian dollar, 128.19. And the Kiwi dollar is unchanged as well, 64.75. To the general commodities, WTI crude is at 110, up a quarter, and Brent crude is unchanged at 111.50. High-grade copper is down 1/3% at 424. U.S. nat gas above 9. I think this is the first time in many years that it's above 9. It's up 1.5% at 912. To finish off, let's quickly look at the 10-year yield. 10-year yield is down 2 basis points at 2.73%. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And I wish you all a great day. Take care. Bye.